All right, everyone. Hey there. Welcome to today's live stream. It is Monday, September 22nd, 2025. Wow, it's flying by, isn't it? Incredible. Hope you're doing great, and let's dive in. So we're looking at a market that's up across the board. S&P 500 up 26, Dow up 30, NASDAQ up 151. Crude down slightly. Silver and gold, big movers today. Silver up 3.2%. Bitcoin off slightly, 2.5%. And yeah, it looks like we have an interesting market. Look at gold, 37.80, up $75, 2%. So big moves. Hope you've been buying gold and silver, that like we've been talking about here for the last year. Very important to have part of your portfolio invested in that. And, I guess I'll just go to this. I had a question. I think I saw the question last week about, do you buy, what's the difference between, buying gold and silver physical versus like an investment, an ETF that's invested in gold and silver. So, big difference, actually. It really depends on a few things. It depends on what you want to accomplish. If you want to be holding physical gold and silver, obviously you buy the coins. And I've talked a lot about that in the past. Just look at some of my previous live streams on that. But if you want to partake in the process of either mining gold or silver or other precious metals, you can certainly look at some of the mining stocks. Those can be very profitable if they strike gold or silver, but it's always a big unknown. A lot of great miners up in Canada. So if you're Canadian and you want to participate in this marketplace, yeah, definitely look at some exchange traded funds that are, or you can even look at individual companies if you wanted to cherry pick that way. But, it's like entirely up to you. There are, of course, fees associated with the exchange traded funds. But, frankly, I just really recommend buying the physical gold or physical silver before they just keep going up and up. So I wanted to address that. Thanks for the question. Great question. All right, earnings this week, kind of quiet. Of note, though, is Micron after the close tomorrow. We'll talk a little bit about Micron stock. You got Jabil before the open on Thursday. Costco after the close on Thursday. So yeah, not a lot of postings for big companies this week, but nevertheless, some significant ones. So Micron, let's look at the chart on Micron. We've got the stock well above all of the other averages. And we've got, let me get this, there we go. So you can see we've got the stock above all the averages, green above red. And look at the difference between the stock price and the EMA 15. If you notice, that's a good $19 a share. So it's a widening gap between the stock price and the next support level. And that is always very positive for the price movement of stocks. So I think this is going higher. And I think if you were to buy shares, you'd be happy selling some covered calls against those shares. Like, look at these. So I pulled up here the straddles. The straddles are going to show the calls and the puts. So both sides of the equation expiring this Friday, the 26th. And look at these strike prices. If we scroll all the way to in the money, right at that threshold, the 165s, 945 is the premium on these contracts versus 773 on the puts. So clearly there's a really big sentiment toward this stock going higher. So if you were to be a buyer of Micron, I'd recommend buying the individual shares and then selling You can even sell the 185 covered calls, and look at that, $320 per contract premium. That's fantastic. So that would be the way to play Micron earnings. That's why these are so rich in premium. It's because it's an earnings play. All right, let's talk about the Fed. Did cut interest rates last week, 25 basis points as expected, announcing 2 more cuts. But I wanted to clarify, the Fed cut its interest rate, but long-term rates, including those on mortgages, went higher. So if you think that, if you're cheering on a Fed rate cut, just know that the Fed cuts very short-term rates. Basically, it's here we go. The Fed lowered its benchmark lending rate 0.25% to 4% from 4.25% at the end of its meeting on Wednesday. And, the stock market cheered, went to record highs. But the rates that were lowered were the overnight lending rates that banks lend money to one another. And it's helpful for banks because it keeps their interest expense down and they can lend you more money at a higher rate. So I pulled up a chart here. I looked at the NASDAQ return in the S&P 500 versus the 10-year Treasury year to date. So you can see I clicked year to date, and it's got the NASDAQ is up 17%, the S&P 500 up 14%, and the bond market down, is that down 10%? Let's see. Down 9%, the 10-year Treasury. And I've been saying for a long time, bonds are just a horrible, horrible investment. You just got to be really cautious about putting your money in bonds. They don't do you that much good. But, a lot of people are sold on investing in bonds. I recommend steering clear. Buy dividend paying stocks. They'll outperform bonds handedly, and, you'll do really, really well. And then the U.S. 30-year Treasury was off as well year to date. Look at the discrepancy in the returns. Like, this gave a 1% return. The 30-year Treasury, now the money is locked up for a long time, versus the NASDAQ and then the S&P 500. So NASDAQ again up 17, S&P 500 up 14%. Terrific returns for so far year to date. And, versus these bonds that, people think, oh, I need to diversify and have my money in treasuries. No, you don't. You really don't need to do that. You can look at other vehicles that will give you similar, people mostly buy bonds for diversification in their portfolios because they think that if stocks don't perform well, then bonds will. And that's not always the case. I recommend gold and silver as a diversification tool to your equity portfolios, or, just balancing and rounding them out with individual gold and silver coins. So it looks like the Fed's going to have 2 more rate cuts, one this month in October, another one in December, 25 basis points each. We'll see how this plays out, but that is the expectation in the equity markets. All right, a couple stocks that I think you're going to really like here. Big Bear. Big Bear is spring loaded. Look at this chart. Oh my gosh, it's like, it is, let's see if I can fit everything on this page here. Stock is moving up over $7 today. But look, all this downward selling pressure. This was after earnings. Remember, earnings came out. They weren't great, and the stock just got clobbered. But this reminded me, spring loaded right here. All these red arrows. I was looking at this. I'm looking at all the bottom, the red cells here in the bottom, these red lined bar chart here. And noticing that they were way less than all these big institutional buyers. And that's what's kicking in lately too, is more institutions buying the stock, driving the price higher. This is my number 1 pick for the year. I think we're going to continue to see a higher price here. Could see $10 in the short term, although the MFI is getting a little overextended in the 85 range, but only for the last 4 trading days. We need to see more days than that before this takes a turn. So Big Bear, take a look. Hopefully you still have some or you're buying more. Great opportunity here. All right, some changes to the platform I wanted to talk to you about, mostly the app. It was the app that came up for this past weekend. The guys worked on that, and they said an email went out to mobile users that they need to update to the latest app version. So hopefully you've done that. Hopefully you've updated your SSP app version. Beginning this Friday, updating the app will be required in order to continue using it. So this Friday is September 26th. Just so you know, if you want to keep using the app, you've got to update it. And we also issued a new terms of use acceptance request, which is already in place on both the mobile and desktop. Users will notice when first logging in after this has been done. So you're going to, within this week or so, you're going to see where we're going to ask you to accept our new terms of use. And once you do that, then you can continue to use the app or the desktop just like you normally do. All right, hope you have a fantastic week. Thanks so much for supporting us, for working with us, and we appreciate having you here.